Morning everybody, it's Chris here from Serene Education with the 4 majors and last update for the 10th of August 2011. Hi guys, just looking at the Euro US dollar setup this morning on our CTC strategy template, and you can see that we've seen upside movement, a very interesting movement, a lot of consolidation. You can see here a lot of indecision. We're having a lot of movement one side, and then we're having a total opposite reaction. One side, totally opposite reaction. These are literally bullish engulfing, bearish engulfing, bullish. You can see the indecision that's been happening over the past week or so, as the market tends to show its hand, where we have one set of negative news counter-reacted by a measure put in place by the governments, and the markets are seeing it their way. Then we're having another set of negative news coming out, followed by another counter-reaction by the markets to try and stem this negative move. And you can see here it's consolidating in this wave. Intraday you can find the pips. You can definitely make profits in these intraday. However, they are very volatile. They're not really clear movements. They're quite edgy. And this is as the news presents itself. This is another figure that comes out, or another news that slips out saying, "Oh, this is the case," etc. And then we see this this tumble, erratic tumble, and then we're getting a counter reaction by the market to try and stem this negativity. As it stands now, the US dollar yesterday left their interest rates unchanged at 0.25. The Fed seems unlikely to change these well through into 2013, at least, or the later part of 2012. So you can see they're trying to keep interest rates low to try and keep the momentum, or the for businesses, etc., like that, to try and get some sort of movements in the industry, to try and see something positive come out of it. So interest rates are unlikely to be changed by the Fed, the US Fed, until the latter part of next year, if anything. So it's a good sign for companies, etc., like in industries, the Japanese market, the Asian market last night. We're very happy with that, and we saw the Asian markets gain a bit of strength last night on that positive news. So they've put it in place, and I think the Japanese Nikkei rose about 225. The Nikkei 225 index rose 100 pips last night. Hang Seng rose 360, 3.6%. So they're happy with that. But there are some traders out there that were disappointed that the Fed did not go any further than what they expected. So we are now looking at the long-term issue. Obviously, with low interest rates, there are repercussions. There are good sides, or there's a positive to it, and there's also a negative. So just be aware of that. Long-term, it's going to be interesting how this pans out. But as it stands now, we've seen some movement in the market, and you can see the Asian market session, a very small range compared to what we've seen recently, but this has always happened on the Asian market, a slight consolidation, especially on the euro and sterling. Almost, it's pretty much sitting just above the 50-period moving average in this case, which happens to be a prior support and resistance for this pair, and you can see on a number of occasions we've seen slight hesitation at this level. So at the 14.3200 mark, we're seeing price taking a breather. As long as it stays to the upside, ideally we want to see price trading above the 2 prior days. You can see the trading session on the 2 previous days, Tuesday and Monday. You can see literally causing or forming a ceiling level. Ideally we want to see price trading above that ceiling level. So if you can see price trading above at least the 14.400 mark going into the US session, then it bodes well to see if we can actually look at the 14.500 mark as our clear indication for further movement to the upside. However, we see the low end of the candle being tested, and we see it closed lower than the 50-period moving average in this case, and the low of the candle at 14.300. then we could ultimately see further extensions lower as we see this wick getting longer and more price action at the bottom end of it. So remember, very indecisive. We have seen almost a full week of selling and buying, very erratic. But the plans are, especially in Euro now, the G7, etc., like that, we're trying to see if they could try and sort out the issues both in Italy and Spain in terms of their economies. There's talk going around that there might be, they might see France, of all countries, the second largest economy in the Eurozone, looking at a downgrade situation. This is the S&P. This is the same company that downgraded the US dollar from a AAA status to an AA plus. So it's I mean, the second largest economy, looking at a possible downgrade. If that was to emerge, then it would definitely send a negative ripple through the Eurozone, and it would also be felt globally. Sterling in particular would probably take a huge whack on that because of the close ties that Sterling or the UK has with its Eurozone partners. So there's still some interesting things to come as the week pans out. Just looking at the news here, we have nothing for Euro today. Oh, sorry, apologies. We have the French industrial production month-to-month figures. That's coming out at 7:45. So literally, it should be out if I'm not mistaken. Let's have a look. If I just, yeah, the previous figure was 1.9%. They were expecting a forecast of 0.1. It's come out at a negative 1.6. So a huge difference. And this is. Next up is sterling against US dollar. Let's have a look. You can see this pair here, like its euro counterpart. A lot of selling and buying, selling and buying. Yesterday in particular, look at that size of that doji. So massive trading range, however, very indecisive. We saw price trading an all-time low, then for that candle, then bouncing higher. And then on just before the close of the market last night in the US session, we saw price trading higher. We saw price trading just slightly lower than the 16,2500 mark. Ideally, if we'd seen a break below the 1625 mark, we would have definitely seen the big money making its move, because you'll see here, if I zoom out on a daily chart, you can see there's a definite support and resistance level at this 1625 mark as we speak. Massive support in the past, resistance, further support, further resistance, and I have a lot of support going into this consolidation range. It's like a huge growth at the end of this upspurt. Now what we want to see is a clear indication now. So we've seen the sterling gaining a bit of strength, then all the negativity came out that the US was there was likelihood of downgrade in the US. That came, we saw counteraction, then we saw huge issue with Italy and Spain as well, mix into all of this. There might be defaults, etc. like that, blah blah blah. Measures are in place. You can see all these countermeasures were taking place, where we saw a lot of selling followed by indecision. Then a measure news-wise came out to try and cap, but then we saw no, the markets didn't really digest it correctly, and then so you could see that we've had this huge pile up here. We had something similar not too long ago. We want to see, as I mentioned, a nice bearish candle or a bullish up move, because as I mentioned, you see this consolidation, you break out. Entry level below that candle, yes, we wouldn't have been caught on it. 2 days later, 3 days later, we would have been in it, and then our stops were in place, and then you move. You're actually trading momentum, and that's what we want to do. So ideally, I want to see a clear break below the 1625 when it closed lower. So ideally, yesterday's candle, if it closed at the low end of its wick as it went to 16.17.9 here, would have been an ideal indication that we are now looking bearish long term, even though the CTC is looking bullish still on a daily. However, intraday, your hour and 4 hour would have been giving us a totally different signal, and we could have been looking for downside movement. That failed too, because we saw a rally late afternoon, primarily because the news came out yesterday afternoon that the US government was not going to change the interest rates and weren't going to be trading those interest rates until they gave us a figure roughly around August of next year, earliest. So that was taken as a bit of a positive sign, I suppose, and we saw upside on the movement of the market last night. That was also felt on most Asian shares markets, where we saw between 1.5% and 3% gains on the Asian markets. However, this morning, sterling has reverted to the downside, however still testing that 16,2500, an area that it definitely needs to break and close. Notice we saw breaks, but we haven't seen it close lower than this area because it's a strong support area. It needs to break the strong support if it is to continue to be bearish. This doji here is a signal of a swing low because we're seeing momentum today swinging lower. If it stays lower, then we are seeing a definite almost a swing here. You can see price action is swinging lower in this congestion zone. Okay, so we're consolidating, but the highs are getting lower. We need to see a break of that to confirm that, and then we'll obviously trade that momentum. That's what we want to do as traders. We want to trade the momentum, the big money. If we can get into it nice and early, then we look to capitalize on that long term. And it's the same here. Capitalize on the previous breakout, and we can be in it for weeks if need be. And that was the case exactly with this breakout, the pullback, and then the continuation lower. And that's what we want to do with this one over here. Now we want to see a decisive confirmation by the big money. And once the big money, the commercial traders have given us or showed us their hand, then we can act on that. So as it stands now, you can see we're retesting on the 4 hour, for example. You can see the 16,2500 mark. You can see we had a break lower. Your entry level would have been here. However, price didn't even go down here. So you would have been, that's what you wanted to see, a break below the 1625 on the 4 hour. However, my entry level was down here, so it was not triggered. And so price moved to the upside. So great. I wasn't filled in my position, which meant I didn't lose anything. But I still followed the rules of the CTC, where your hourly, etc. like that, had to give you an indication of that, and sure enough we did. So as it stands now, we need to see a definite close below 16,2500 to give us an idea of further downside movement. So ideally we want to see a nice bearish engulfing, ideally on our 4 hour candle, to give us an idea long term of the momentum, and then we can trade it. So that's the beauty of trading these long terms, especially in volatile markets. You don't want to be trading small time frames because of the volatility that occurs at these lower time frames. If you are trading lower time frames in this volatility, you're going to have to take your pips when they present themselves. Be very, very strict with your money management rules and abide by those money management rules. I've seen a lot of people lose their accounts trading volatility on smaller time frames, so be very, very cautious when doing that. At my eyes, I want to see a clear break below 16,2500, especially on the 4 hour chart. And if I do get that, then it's just clearly confirming to me long term that the money is looking downside or favoriting downside movement, and then I'll act on that. However, it's the same over here. We see a break above at least 16,3300. At least above 16,3300, then we could see a counter trade at a possible support, long-term support at 16,2500, and we could see higher highs intraday. So if we go into the US market trading session and we're trading above 1633, then we're looking at trading above a previous swing low. That would just mean that we're looking for possible highs. So as it stands now, trading above 16,3300. The latter part of trading today, we'll look for higher highs. Trading below 16,2500. Going into the US session, we're looking for lower lows. Next up is the US dollar Swiss franc. Let's have a look at the daily time frame. You know that this pair, the US dollar, has been gaining a lot of, losing a lot of momentum at the Swiss franc since May of last year. You can see the trend, overall trend, is looking very, very bearish for US dollar against Swiss franc. And just recently, you can see the massive sell-off in the US dollar against the Swiss franc as everybody starts buying into the safe haven currency, which is Swiss franc. Asian market trading, we've seen price drop lower, but we've seen a slight pullback going to the European session open. A lot of negativity, a lot of selling yesterday on the US dollar against the Swiss franc, and there's been talk that we might even see the Swiss government now really starting to intervene with either intervention of some sort or QE measures. There's been talk of the Eurozone actually using some sort of QE, quantitative easing measures, I suppose you could call them, something similar to what the Americans used the latter part of the 2000 of last year in particular, to try and stem this negativity that's been felt throughout the Eurozone. And it needs it. I mean, if you think about it, the worse the figures come out in the stateside, the more you're going to see people running to these areas, or commodities in particular, like your gold and your silver. Swiss franc is very much a safe haven currency in terms, and that's what we're seeing. The only downside, though, a very strong franc is not helping the Swiss government. As I mentioned before, it just doesn't bode well for long term for their GDP figures, import exports, etc. It's not good having a very strong Swiss franc surrounded by a very weak eurozone or a weak euro. So they will intervene. Whether it's they'll sit down now and come up with some sort of idea to try and stem this negativity with the US dollar, they might intervene and actually start selling their franc in large amounts to try and bring some sort of consolidation here, while the market tries to rectify other issues, i.e. Spain and Italy in particular. There's mention of a possible downgrade for France, which would actually be a real negative repercussion. So be aware of it. If you are trading Swiss franc, there might be a likelihood of a massive move to the upside as these measures are put into place. So be very careful when trading this pair. You can see on a 4-hour and an hourly, you can see the massive downside, the actual gap yesterday or last night on Asian trading, just before Asian market trading. However, we've seen a slight consolidation at 720 now. We need to see a price sitting and pushing higher on this, ideally breaking, trading higher than the previous consolidation range at 730. Break above that, we could look at possible price testing at least the 745 mark of the intraday downtrend, which happens to be the previous breakout area. You can see support here at roughly the 750, but before we get there, it's roughly the 745 mark that we will be testing. So if this price can trade in this zone here and break to the 730, then we could possibly be looking for further upside movements to at least the 745 mark to start with. Last pair of the day is the US dollar against Japanese yen. Notice where price is trading as we speak now on a daily. We saw that measures brought up by the Japanese government, monetary easing policy mentioned a number of days ago. We saw this massive spike to the upside on a daily, testing the previous breakout area roughly around the 80 mark. However, it failed to materialize. We failed to see price acting on that and closing higher. A long down candle confirming that the buyers were pulling out, and they saw further reaction to the downside. We saw this long wick here, and the following candle closed or opened and closed lower, depicting that we were going to see further downside movement. And sure enough, the last 3 days in particular has seen price retesting the previous low that we saw at the end of July and the early parts of August, and we are now testing that area as we speak. So negativity still paramount, or still on the charts on the US dollar against Japanese yen. We saw the Fed government yesterday coming out with news that they were going to up the interest rates for the US dollar for the foreseeable future. We've seen a noticeable change in market sentiment on the share side of things. So a lot of the share markets have actually seen that depicted on Asian market trading this morning. However, on the currency side of things, we're still looking bearish. If we don't see a bounce at this area here, the price support, if you look at the 4-hour in particular at the 76.80 mark, then we're just going to see a continuation lower for this pair. So we definitely need to see some sort of consolidation at this area and a push higher. Otherwise, we're just going to see a continuation to the downside, because our CTC is still confirming that we're looking for. There's still bearishness on the table, and we don't see that consolidation and some sort of intervention other than the one we saw earlier by the Japanese government. We're still going to see further shorting or further selling of the US dollar against its Japanese counterpart. So it'll be very interesting to see. If you look at the 30-minute chart, for example, you can see how over the past couple of days, price action has been governed by the 50-pair moving average on this 30-minute time frame in particular. Notice how the 50-period moving average is acting as a strong resistance. It's trading price is trading below all the moving averages, in particular the institutional moving average. So if you're trading below the institutional moving average, we know that we are bearish long term. We know that in particular we were trading on one side. That intervention that we saw at the early part of August did see us cross above that intraday the institutional moving average. However, we're trading below it again, and we've seen further selling on that after a squeeze breakout. So as it stands now, you can see prices is forming lower swings, which depicts a trading lower. However, notice the lows on each now. You're starting to see a squeeze pattern. We're starting to see lower swings, and we're going to this consolidation. Ideally, we don't want to see it breaking lower than that. So if it stands to reason now, if we see price consolidating at the range it is at the moment now, we could see another reattempt of the prior swing, in this case the previous breakout area, roughly around the $77 mark, and the $77 area was the all-time low area on a daily time frame, and now we're trading below that. So ideally, if we don't see consolidation at this range as we speak now, in this consolidation to the downside, then we're going to see further selling opportunities. Notice we've gone to this consolidation to the downside. So are we seeing the signs of a slowdown in the US dollar selling and a possibility of the US dollar gaining a bit of strength going into the latter part of this week? It remains to be seen. However, what we need to see is the trend, this intermediate, this major downtrend intraday to be breached. So ideally, price needs to be trading above the 77 range by the latter part of today, going to the US session to see any further upside movement materializing on that. A clear indication of trading above the 77.40 mark would definitely give us an idea that we look likely to see further upside movement for the remainder of this week. That's it, guys. I hope you have a fantastic trading day. Please, if you are using the CTC strategy templates, make sure that you're following the rules of the templates and you back it up with strong money management rules. Other than that, happy trading, keep it simple, and trade serenely.